Hello to crypto fans! What's up? It's a beautiful day to talk about RWA. We're going to talk about real world assets a little bit. This might be a little bit longer video, but I'm just trying to get some ideas, some thoughts. A lot of people might not have even heard of RWA. Maybe you have. Maybe you are thinking it's one thing or another. I'm just trying to put out some information for you guys, get some thoughts out of my head. Maybe I'll come up with some other things and make a video on real world assets. First thing I'm going to do is I'm going down the categories list on CoinGecko, and the entire market cap of all the real world asset projects that are listed on here are 51. This is crazy. This is insane, right? This is the largest asset kind of class, the sector of crypto that there is going to be. And I'm going to kind of explain this a little bit. And maybe you haven't quite understood what it is. But real world assets, I get it. Most people are thinking exactly that, real world assets, or maybe tokenization of real world assets. But what is that kind of classified as? And I'm going to go down this list real quick. And what I want you to understand is that all of these sectors are like an umbrella. RWA is like an umbrella. Real world assets are like an umbrella for all these things that make real world assets possible. And I'm going to explain this in a little bit. You see some of the biggest sectors. Smart contract platforms, first off, or layer ones, or layer twos, or proof of stake, proof of work, all these blockchains and all these stuff. Real world assets have to be on some sort of blockchain, right? They have to be on some sort of project. So this is also a part of real world assets. Without the underlying technology of blockchain and some of these smart contract platforms, we wouldn't even have real world assets, right? Secondly, is we need liquidity for real world assets. What is a real world asset? Is a dollar a real world asset? Obviously, right? So we have stable coins, fiat backed stable coins, USD stable coins. We have stable coins. Stable coins are part of real world assets. That is ultimately what's going to drive liquidity into this whole crypto ecosystem and market. Once you have, let's just say, trillions of dollars of stable coins, what are these stable coins actually good for? Right? Think about it, right? You could buy stuff, you could transfer it. So, but you also want to generate yield. You could borrow and lend these stable coins. But what are you going to use for collateral, right? What are you going to use for collateral? Is cryptocurrency, meme coins good for collateral? Absolutely not, when they're extremely volatile and they get liquidated in seconds, right? It doesn't make sense to utilize a lot of the cryptocurrencies or meme coins for collateral. So what is going to be used for collateral on these borrow and lending platforms to generate yield for these stable coins and holders and so forth? Well, it makes sense to have real world assets, right? Because if you have a real world asset, you can use it as collateral, you can borrow against it, and then bada bing, bada boom. So first, stablecoins. That falls under the umbrella of real world assets. Why? That's the liquidity driver. Then you have the DeFi market, the whole DeFi yield generation, liquidity staking. You have all of those that also fall under yield farming, DeFi. Those all fall under the umbrella of real world assets. Why? Because what are you going to do with the real world asset on chain? You're going to use it as collateral to borrow stable coins, to keep money in the ecosystem, to buy whatever you might want to buy. You don't have to sell. When Bitcoin tops out at $3 million or $300,000 or $100,000, whatever it is, and you want to take profit, you really want to take profit into, fiat that's just worthless, you're going to try to generate some yield on that, right? You might not want to hold your crypto anymore. You might want to hold something more stable, like a stable coin, but you want to generate yield off that. And you can do that now with all these protocols. We're seeing some of the biggest names in the game, in the banking sector, the biggest names in the world, all talking about tokenization. I am warning you, you're going to hear it like crazy in 2025. They're going to talk about tokenization pretty crazy. It's coming, it's coming, it's coming, it's coming, and it has kind of steps to it. They need to get liquidity in the system. Borrow and lending protocols are the first thing. Backed by what? Backed by real world assets, backed by bonds, backed by maybe some commodities, and obviously by fiat, cryptocurrencies, and so forth. So this real world asset sector is just absolutely tiny, 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 tiny. A lot of these protocols that are building it are just absolutely just ridiculously small compared to some meme coins in the industry, some AI coins, some obviously blockchain projects, which are great because that's the umbrella of the real world asset sector, right? So we could see some of the top ones. I mean, these products are BlackRock's flagship products for real world assets, bringing tokenizing, bonds for what? What are they going to be used for exactly in this ecosystem? Once we have liquidity, once we have this yield generation stuff, you're going to start to see a lot more products that are going to turn into what? They're going to turn into liquidity for other sectors, more illiquid sectors, maybe some, people luxury goods, tokenization of luxury goods, tokenization of collectibles. But those industries are actually pretty small compared to the one I am most bullish on, which is the real estate sector, right? Why? Real estate is the biggest asset class in the entire world. It is worth trillions, hundreds of trillions of dollars worth of real estate all over the world. And it's pretty difficult to kind of get into. So you have all these new wealth generation of people that are younger than me making countless money on memes and so forth, and they're going to want to invest, all right? How are they going to invest into real estate? Let's just say I made $10,000. How can I invest into real estate? And I'm going to do some research and be like, all right, I do not want to invest in the city that I'm in. I want to invest in this area. I truly believe that maybe El Salvador, I'm Bitcoin friendly, right? I want to invest in El Salvador and I got $10,000 and I don't want it really volatile. I want to keep some gains. I want to create some more generational wealth, make 5-10% yield on that, investment or whatever it may be in real estate. And that is kind of the mindset people want. They want more stability on some of the profits that they may have made. I have $10,000. How can I invest that into El Salvador today from any other part of the country? I'm going to have to spend $10,000 to make a trip out to El Salvador, yet alone invest. And I can't invest in El Salvador because I'm not going to be able to get a bank account. I'm not going to be able to get a loan to buy something. I don't want to go in debt. I just want to invest $10,000 into something stable that's going to bring me something, some liquidity maybe in the past and bring some more stable gains other than the high volatility of crypto. I'm going to gamble that elsewhere, but I want some stability somewhere else. So how can I take $10,000 and invest it into real estate? I just absolutely can't today. I would gonna have to find maybe a group of investors so we can pool funds in to buy one place and so forth because I'm not going to get a loan down there. I'm not going to be able to go down there. How am I going to manage it? How am I going to make sure it's going to turn a profit? This stuff is just it's just way too there. So this is why most people don't even bother to invest in real estate. Yet alone, $10,000 is more money than 80-90% of the people have liquid anyway. So you're already cutting out majority of the people in the world to invest into real estate because they just simply just don't have the amount of capital needed, and they don't have the time, resources, energy to invest in the places that they might want to invest in. So most people investing in real estate is just getting a loan and buying a house and living in it. That's most people's, So there's definitely going to be an educational thing on that we can start to invest in real estate through tokenization, through this real world asset sector. And what's going to happen now is we're going to be able to tokenize and fractionalize real estate, which is the biggest asset class. This is why I'm most bullish on it. And now I can take $10,000 and I could go find somewhere that's managing some uh, high yield or short term rentals or long term rentals or some business properties or commercial properties, whatever it may be, in an area that I might be looking for. And I might be able to buy fractions of that real estate with tokens. And I don't even have to be in the country. I don't have to go travel. I don't have to spend all my money to travel down there, check it out, whatever. I could do all my research online. I could take some gains, put in a more stable asset, and get tokens how I already know how to do. This is going to be the crypto's kind of way to keep their gains, right? And so now I have these tokenized real estate assets in the real world, the real world assets, it's real estate, it's being managed by somebody else, and I just get some funds at the end of the day. It's less headache. I can invest into real estate, earn a nice APY on whatever it's backed by, um, and I can allocate this with crypto. And now, and then eventually, the real world asset market is going to mature. And what's going to happen now is now these assets are a little bit more liquid, but they're going to be a lot more liquid because of one reason. Well, now I have a token that has value because it's backed by real estate, right? And it's bringing me income coming in. But I could also utilize that for collateral. So now I could go to these more collateralization, yield generation, RWA platforms, and we'll be able to take that tokenized property and say, hey, I need some collateral for it. My $10,000, I have a token that's backed by property. It's worth $10,000. And I might be able to get a quick loan, a quick, I can lend off that. Instead of selling my asset, I can lend off that right away. And now I can have my, lending off that real estate asset almost instantly. Go do that, your home equity. You got equity in your house, you got an investment into your house. Go pull out some money. Now you're gonna have to talk about the interest rates and refinancing and all this crap that's just gonna end up making you I guess you could get a short-term loan with extremely high interest rates, but again, it'd be only a couple clicks of a button. All this stuff is going to be possible over the next, who knows, year, 10 years. How quick is this going to happen? We know how fast technology moves. This real world sector has been being built since, well, definitely last year. We had our first liquidity kind of event in RWA. RWA started to get some hype. It started, even Larry Fink mentioned, tokenization is coming after the ETFs. And that's kind of when the market kind of went crazy in earlier February, March in 2024. We started to see the real world asset started to get some hype. We saw a lot of projects start adding RWA um, to their marketing and to their profiles and websites, and RWA kind of came about since then. So ever since then, we're having projects being built. We've had some liquidity enter the sector. Now we're on that second wave. And now I'm going to talk about my opinion on things. This is not financial advice or anything, but this is how I kind of see the market kind of coming out. We saw that first liquidity event. We saw that first hype. It's in people's minds. People are starting to, for the last 8, 9 months, people are starting to talk about, okay, what is RWA? It's real world assets. I get it. It's a real world asset that's being tokenized. You can have a certificate, a bond, so forth. So people are starting to understand the basics of it. Now we're going to have that other second massive liquidity injection into this sector. And what do I mean by that? Is we're going to see an insane amount of venture capital, insane amount of angel investments flood this market, and everybody's trying to find the winners that are going to ultimately take up that market share of adoption when the time comes more later down the road. They're all trying to find those unicorns in the rough, the platforms that have products and raising money and so forth. We will see that massive, massive liquidity event coming, I believe, in 2025. And what that is going to do, you will start to see an absolute mass load more projects being built. Everybody trying to siphon off that funnel of liquidity, saying, hey, this is what I promised. I'm going to build the world and all this stuff. Hey, by the way, give me $10 million to build it, right? And they haven't even started building it yet. This is what we're going to start to see. This is when those massive kind of cycles tops. But there is a good and bad thing about these massive liquidity events. They determine the winners and losers. You shove tons of money into the ecosystem. People will build, some people won't. Winners will come out on top. Adoption will happen. A lot more users will happen. And obviously, you get all the people that scam, that didn't really build anything, that didn't build products that nobody wants to use, and those kind of fall off. So we'll have a massive cycle. And then after that, I'm thinking maybe 3, 4 years down the road, maybe 2 years, maybe 5 years, maybe 8 years, maybe 12 years. I don't know. But later down the road, we'll have a massive adoption cycle. And that is when we'll get hundreds of millions of people invested into this whole entire ecosystem. Maybe that comes, I mean, hundreds of millions is and not that many people today. Maybe we'll get a couple billion in 4 to 6, 8 years, 12 years, so forth, that are all going to learn how to invest into this new asset class. And it is absolutely incredible. I can literally think about it. I can invest just $100. I can invest into real estate, or I can invest into a business, or I can invest into something all across the world that's real and have share of that, and even use it as collateral. And so my money is a lot more liquid all around the world with this real world asset sector. And this real world asset sector is like an umbrella. Think of it as an umbrella of the entire crypto ecosystem. You have to have the layer one blockchain, layer twos. You have to have the actual protocols underneath it. You have to have all the DeFi systems because there's going to be borrowing, lending. There's going to be collateralization of these assets. Then you gotta have the asset platforms that are actually bringing the assets on chain, making the smart contracts work, making all the legal stuff work, making it easy for the real world user to manage your products, manage your portfolios, manage your owners, and so forth. So it's like a whole ecosystem. This is what crypto was made for. Crypto was made to take over the financial markets. Well, what are the financial markets? A lot of it is real world assets, you know. A lot of it is commodities, and you could even fall into stocks in there. What are stocks? Stocks are, equities in a company, a real world asset, right? So this is exactly what crypto is for. And you're looking at 51 ranking on the CoinGecko market cap overall list. It's absolutely the most undervalued sector in crypto right now. And this is just not my financial advice, but this is where you should be focusing if you are looking to invest into crypto overall and so forth. I'm hugely bullish on the cycle of events for RWA. First comes a lot of stable coin regularization, adoption of stable coins, borrowing and lending still of these real world assets, and collateralization at the end of the day. And all of these real world assets, you name it, they're coming on chain. We are going to tokenize the world. You might hear that, but who's going to benefit the most after tokenizing the world? I definitely don't think we're going to tokenize the world in the next year. It might take 10 years, 5 years, 10 years, 20 years. Technology moves at an incredible speed, especially with AI. But we'll just have to kind of wait and see. Tokenization is here. This is the sector to watch. And again, it's just not one sector, it's all of the sectors combined. It's an umbrella. That's kind of like my thing. And there's a umbrella right there. That's what you should be doing right there. You should be collecting all the coins, right? Anyway, I hope you all enjoyed this video. I hope you might learn something. If you have anything that you want to comment, or maybe can make another video on a specific RWA or so forth, shoot me a comment below. Anyway, have a wonderful, wonderful, wonderful day. Love y'all. Peace.